Hello, everyone. This is Ted Bauman here with Clint Lee with your Money Matters video. Angela Giroux is out again this week. So you made fun of me when I took time off. Angela, you're going to have some catching up to do when you get back. This week, we want to talk about just what to do in a market like the one we're in right now. I started the discussion in some ways on Friday in my video where I spoke about really the power of options trading. Today, we're going to take that to a slightly higher level where Clint is going to explain to us some of the logic behind trading and how you can do it. But let's start with just looking at what's going on in the economy right now. Last week just seemed to be universally bad news. I mean, we had a payrolls miss. We've had consumer price inflation, the highest in 13 years. Everybody's waiting for the Fed to start tapering. There's shortages everywhere. There's an energy crisis. The Chinese economy is declining. Its growth is slowing. And on top of that, it looks like the Democrats are headed for an epic failure of governance, particularly regarding renewable energy. And yet, the S&P 500 added almost 2% last week for its best week since July. And that was just after a 5% pullback not that long ago. So, it's hard to know what to do if you're an investor. And on top of it all is still worries about long-term valuations. And what this means is that really it's a headline-driven market. It seems to be a headline-driven market. I suspect that there are deeper currents at play in systematic market strategies that kind of amplify some of this stuff. But the question is, are there short-term strategies we can use to capitalize on all of this? Clint, what have you got to say for us?
Yeah, I mean, it's definitely feels like it's been a headline-driven market, but it seems like you should be doing the opposite of what the headlines are suggesting. I mean, the news, like you said, I mean, just seems to be universally bad. At the same time, we were hitting sort of that 5% pullback threshold for the S&P. And what ends up happening, we see, some pretty strong gains unfolding, especially late last week in the market. And so I think, for a lot of people I know, big picture, looking out longer term, especially if you're a buy and hold investor, with where valuations are, the things you just routed off, there's a lot of concern out there. But I think there's still a lot of opportunities in the near term, especially when you get into volatile markets like these. And so just having a shorter term trading strategy in place to complement sort of what you're doing on a longer term basis in your portfolio, I think those two components can work very well together. And so when you start to look at a short-term trading strategy, I think one of the most important things to recognize first is to ignore the headlines and price is king. Price of the markets, what price is doing, that's where your attention should be at. And that's why, for a lot of short-term trading strategies, price really comes through and manifests itself in a couple of different ways. One is with just chart patterns. We show a ton of charts on these videos, and we talk about the things that we're seeing within that. The prices, they create chart patterns. These chart patterns repeat. There's all kinds of research out there on this. But then price is also used to construct a lot of different types of indicators, a lot of different types of signals. So anything from a moving average or a price oscillator. We talk about the stochastic or the RSI. There's just a countless number of these things out there. But it all comes back to, once again, it's price. And some of them use volume, but pretty much all of them use price in some way, shape, or form. So price is king, and from that standpoint. And really, what I like to do, what I prefer to do, is to combine these things to take the types of patterns you're seeing unfolding on a chart, how that's being influenced by price, and then get confirming indicators on the technical side there as well. I think that's kind of the approach you want to look at when you're developing a shorter term trading system.
Well, you would do, wouldn't you? Because you're a CTA, right? Which is a
CMT.
CMT. Sorry, I mixed up my two C's. CTAs are another interesting thing, but you're a CMT, and that means that you're one of the the kind of elite of this technical analysis. Now, I spoke about this on Friday, and I emphasized the fact that in the short term, it's perfectly fine for an investor to ignore the fundamentals of a company and just focus on this price action because it is possible to make a great deal of money on it. And there's nothing wrong with it. Just don't bet the farm on it. But the real question is, and I guess everybody wants to know, can you use this stuff to get into a trade before the price action moves in the direction that you want? And can you give us some examples of how that can work?
Yeah, you can. I think the one thing you want to do is to use these as confirming indicators. You can definitely start to see when the short-term trend is starting to turn, but you want to see confirmation that something new is in place. And I think the other thing too, especially for investors who are newer with trying to develop a trading system, once you start getting to all these indicators, it's easy to clutter up your chart, so to speak. And with all these indicators, and you end up with more noise than actual information. And so I think it's important to highlight that you want to research these things. You can maybe paper trade them and see what works for you. Customize value. I customize values for a lot of my indicators, but I'll give a couple examples of a few indicators, a few systems that I use, that I've used in the past, that I think work well. It's a good starting point if you're going down this path. One is just a simple moving average crossover strategy. There's a common technique out there to use a 4-period, a 9-period, and an 18-period moving average, and the signals are simple. When the shorter term moving average crosses above the longer term, that's a buy signal. When it crosses below, that's an exit signal. And depending on how aggressive you want to be, you could use the 9 or the 18-period moving average. So here's just an example of how that works. Taking those 3 moving averages and applying it to the XLE ETF. So this is an energy sector ETF. Here's a chart for this year-to-date period. And I wanted to flag the buy signals on here. So the purple line on here, that's the 4-period moving average. And your buy signal would be once it crosses above the longer term moving averages. The blue's a 9-period, the green's a 20-period. And see, we had 4 signals come up on here. On the right-hand side, one of them was the one where you had a little bit of whipsaw, but otherwise these buy signals, applying this to, once again, this is the energy sector ETF. It's tended to work pretty well this year. And this is something that is robust in that it can be applied, across a wide variety of securities. It's not just this particular ETF. Any type of ETF, any type of stock, you can look at this as well. Then I also know a lot of people, like to look at oscillators. We talk about the MACD a lot on here. Another one that comes up a lot is the relative strength index. And there's nuances to these indicators. I want to show that with the RSI, the relative strength index, applied to the S&P 500. So I just want to focus on this indicator itself. So here's that indicator for the S&P for the year-to-date period. Now, a lot of times we use this to judge overbought, oversold areas when we're seeing the movements in price. But a lot of times it's not that simple. This thing simply getting up to 70 or 80, signaling overbought, or getting down to 20 or 30. A lot of times that's used as an oversold. But it's not that simple. When you're in a bull trend like the S&P has been for so much of this year, during a sell-off, you rarely see this get down to sort of that 20 to 30 oversold type area. So what I'm highlighting here on this chart is up until just recently, anytime we've had a dip or a pullback in the S&P where I've drawn this line, it's stopped at 40 on the RSI. So a lot of times when you're in a bull market, this 40 level kind of marks the extent of a pullback. Or when you're in a bear market, a lot of times you'll see this rally up to the 60 level and turn back lower. So just have those levels in mind. There's nuances to how these indicators work. And then just one example, putting all this together, I thought it would be interesting to apply this to the 10-year Treasury yield. There's been a lot of action there lately, influencing what we're seeing in stocks and rotations. But this takes the 10-year Treasury yield. We plot that moving average system. Then I've got the MACD on here and the RSI as well. And what I would highlight is that, on this moving average system, there's 2 different spots where we started to see some buy signals. The first arrow on the left, we had that shorter term moving average crossing up. But once again, what I like to do is I like to confirm these things, confirm these indicators. So when you look toward the bottom panel, when we had a more sustained break, You had the MACD had crossed above zero and started to pick up, but then that RSI, that green line, broke out above that 60 level. So, that 60 level had been kind of served as resistance when yields were in their downtrend. And when it finally broke above that 60 level and you had yields breaking above 1.4%, that was kind of your confirming signal that we were going to see a sustained increase in rates. And that's exactly what happened.
And of course, the irony is that this is actually bearish for bonds because it means their price are falling. So, the interesting thing is that you can apply this to something that you're not actually investing in, but being able to identify when rates might be set for a tick higher could actually allow you to move out of stocks that would be rate sensitive. Maybe it's time to pull back on the tech stocks. Of course, the strange thing right now, and that's a topic for another day, is that tech hasn't been hit as hard by this recent uptick in rates, possibly because they've already been priced in. But one of the things that I wanted to ask you, after you showed those charts, particularly that, on the XLE chart, is how do you know when to get out? You see these buy indicators, but one of the critical things for short-term trading is when the run has had enough. How do you do that?
Right. I mean, it could be just as simple as using that same moving average concept. Just as that was your signal to get in, you can use that as your signal to exit. Once that shorter term moving average crosses below the longer term averages, that can be an exit signal. If you wanted to be more active in taking profits along the way, you could use a shorter term oscillator, something like a stochastic. Once that gets overbought, that can be an exit signal. There's no shortage of signals that you can use out there for both entries and exits. Once again, I think the best thing to do is to just explore these things. You can customize the values in these and paper trade them and see what kind of works best for you in terms of how you like to view the markets here.
And I think it's an important point that you're making, is that that this technical analysis stuff, it sounds complicated. You're a CMT, you've studied this and all that. But at the end of the day, it's really quite simple. I mean, I know Investopedia, for example, is a place where you can go and get some technical, basically training, if you like, on this kind of stuff. But the key thing is that we're not talking about investing here, are we? We're talking about trading.
Right.
And the paradox is that sometimes you might trade something that you're actually quite bearish on, because there's a short-term opportunity. Can you give us an example of that? I think you got something to do with China teed up, which the Chinese economy is just reported bad figures, but there's a potential for some gains there.
Right. There's been a lot of carnage in a lot of Chinese listed stocks, especially in the internet sector, and so that's one. I've been watching emerging markets in general, but then what specifically is going on with an ETF, the ticker is KWEB, KWEB. That is a Chinese internet ETF, and that is one where I am using sort of these technical indicators to flag a reversal in that downtrend that we've seen. So trying to pin, instead of guessing where the bottom's at, instead of trying to catch a falling knife, using these indicators, these strategies to confirm when it looks like there's a big reversal in place. And just, with how beat up this ETF has been, there could be a good opportunity here. And so here's the chart of that ETF of KWEB. Once again, this is year to date, just seeing that downtrend that's been in place. But here's a couple things I'm watching. Just recently, we have a buy signal on that moving average system. So you had the short-term moving average crossing above the longer-term moving averages. Now, what I want to see right here is a little bit of confirmation. I'd still like to see price get a little bit more constructive, move a little bit higher at the same time. You see the MACD start to pick up more above the zero line. But then the other big signal that I'm watching for is this RSI. So I mentioned, when you're stuck in a downtrend, being overbought on RSI might only take you up to sort of the 60 level instead of the 70 or 80 level. And that's exactly what you've seen with KWEB throughout this year. And so if we see the RSI on here break above the dash trend line that I put on here, the 60 level, that's a great confirming indicator that the bottom, at least temporarily, is in, and that there's a good short-term trading opportunity here in this ETF.
Right. Let's keep that chart up there for a second, because I just want to point out something about this. This is something that has actually bedeviled us with our profit switch service this year. Right around September 7th on this chart, you can see there was a peak above the trend line for RSI. It looked like there was going to be a breakout at the MACD level, and yet it was a false signal. I think that's why the important thing is to look for that confirmation, isn't it? You want to get ahead of the trade, but at the same time, excuse me, if you misinterpret it, you can also end up with, or rather not misinterpret, but if it turns out to be a signal, a false signal, you could actually end up, having a pullback again. And that's been happening a lot this year. And I think it's important for people to realize that this has been a very difficult trading environment precisely because of that. And sometimes it's better to wait for that breakout, because a lot of times we get people saying to us, hey, you told us to buy a stock, but it had already gone up, by X or whatever before you announced the sale. And that's because we were looking for confirmation. And it doesn't always work, but the odds are so much better if you wait for the confirmation instead of just looking for that alignment, because sometimes it doesn't work for you.
Right. Yeah.
Now, you've got something going on this, and this is about leveraging these kind of things with options. Tell us about it.
Yeah, I mean, so I've developed my own technical system. I've spent the better part of a decade just working on this, working on these different types of indicators, customizing their values, and putting it all together to develop this short-term trading system. And I'm always tinkering with it. I'm always trying to make it better. And over the last year and a half or so, I've been spending a lot of time with a new set of indicators to plug into my system. And it's absolutely remarkable, because the best way I can describe how this works, it's almost like a countdown. It's almost like a countdown that emerges on the chart to when the trend is going to reverse. So we've got this, and this actually happened with KWeb. So you've got this downtrend in place with KWeb. And as we're seeing all these things develop on the technicals, it also triggered this new set of indicators, triggered that this countdown is completing. And it's so powerful because it tells you when this trend is exhausting itself and when it's about to just snap back in the other direction. And we had that signal here with KWeb as well. Now, I've taken that signal, plugged it into my system, and I did a back test over a 3-year period covering every stock in a very popular market index. And the results, I'll flash a summary of the results up here real quick. Over that 3-year period, and using some risk management guidelines here as well. You're not just going all in on these things, right, but taking this shorter term trading strategy, using these signals, using options to trade them. This is what it looked like in that 3-year back test. You had the strategy itself delivering a 1,165% return, and you can compare that to what some other popular investments over that time have looked like. And so that's why this is a new service that we are extremely close to launching. I'm very excited about it, just in terms of how these new indicators have come in, have complemented and made the system much better. Once again, I'm always working on improving this technical system, and this is a big leap forward with this.
And I believe your launch is going to be on Wednesday. Is that not the case?
That's correct. Yep. On Wednesday.
Yeah. So basically, that's it. The critical thing, folks, is that when the stock market is not going in any particular direction, there's still plenty of ways to make money. But that is when it's important to have this technical analysis perspective. And if you don't want to do it yourself, you can sign up with a guy like Clint, who can do it for you. And then the track record, the back test is excellent. Clint, thanks very much. We'll see you on Wednesday when we have the launch.
Sounds good.
All right. Take care.